Howdy folks, now that natural gas has got going, the natural question is, where are we going to? It's a little bit colder here today in Stellenbosch, as you can see by what I'm wearing. So we're at 3.777, 3.78 right now, and you can see the gap up here. I've got the NYMEX day chart here, straight from the Henry Hub. There's the gap up. We're long from 3.31, we're now trading at 3.77. So this is a really good position to be in, and approaching the previous high just a few days ago at around about $4. We should get there quite easily, I reckon, and let's have a look at what happens thereafter. So in order to do that, we've got to zoom out quite a long way because we are now at about a 12-month high on natural gas, and I think it's caught everyone a bit short, not expecting this to surge up. This is the sort of long-term view here. This is a day chart. So we've overcome the 3.67 resistance again and surged above there. We're now closer to 3.8. There's the $4 high. And you can see we've now got an uptrend. And first thing we can do is draw a trend line in. The trend line's there to kind of give us an idea of when we turn around, if we turn around, where we should be looking to get out. So that now forms a dynamic support level. So as long as we're above that trend line, we're pretty safe. I could extend that line a bit further down, but let's just leave it like that for now. So we've got the dynamic support line below us. We can adjust that as we move along, but that's a good start. Now let's have a look at what's above us. I've got 3 red lines in here and some colored blocks, and in order to show you what those are, I'm going to go to the weekly chart. Don't take too much of your time today. I know a lot of you are on holiday now. Let's just zoom this out. I've got some blobs drawn here to the left-hand side. There's one lower down. We're about at that level now. There's one slightly higher up over here going back to 2013. And there's another blob up here in 2018, and these are all sort of swing highs. So I've just drawn lines across those swing highs, and then the colored blocks that I've got drawn above us are just Fibonacci levels. So I don't know if we need to focus too much on the fib levels, but it does so happen that they coincide with some of the other things we've got here. Now let's have a look at something else. You can see this thin red line here denoted as MSB. That means market structure break. When the market broke down through that support level, we formed a market structure break. Since that structural break, we've been bearish. Now that structure break was a support, now it's a resistance level. And so we might approach that level. We'll have a look at the numbers in a little while's time. Don't get too excited. So that market structure break we need to pay attention to. And then let me just zoom in and quickly show you where these fib levels are. There's the 38%. There's the 50% retracement level. It's not a Fibonacci. I know people keep on telling me, but it's thrown in with a sequence. There's the 618, the 78.6. All of these are potential targets. We have been there before. In fact, during 2022, we saw that big surge up to around about $10. We're trading at 378, remember, at the moment. But first things first, the market structure break and some of these blobs, the red lines, just to remind you where these red lines come from, those swing highs where I've drawn the blobs, and I've just simply drawn those red lines across to where we are now. Right, now we can zoom in. We've got the market structure break, we've got the red resistance lines, we've got some moving averages, only one actually now, the 200 period moving average, the purple line, we're touching that right now. And then we've got the 38% Fibonacci level, the 50% retracement level, the 618 fib, the 786 fib. Right, let's zoom in. We've got all of those lines on our chart, and now we know where we are. Now, the purple line above us is the 200-week moving average. I'm going to zoom into the day chart. Notice that the 200-day moving average is now well below us. There's the 200, the 100, the 50, and the 20, now ribboned or stacked above each other, rainbowed, if you will, in a perfect uptrend. We've also got this uptrend line that I drew in a short while back. Right, now we've approached this level here, the first red blob, going across to the left-hand side. It's too far to go back. There it is. Well, we can see it over there, right back there. The next one's over there. And we've also got the one in the middle going back all the way to here. So let's keep this super simple. We're in an uptrend right now. We've got the first resistance where we are right now. And we're approaching it after having rolled over, gapped up, and heading back to that $4 level and that resistance level, the red line drawn from the blob on the left-hand side. Notice that we did exceed that blob on the last rally up. So essentially it's been broken already. We've had a pullback, rollover, and we're now retesting it, sort of surging back up towards it. I don't think it's going to perform much of a resistance task here, and I think we should get through there quite easily. Now, what's the next resistance above us? Okay, the next red line, note the price, 4.45 or thereabouts, give or take a few cents. Haven't drawn these perfectly accurately, but they're pretty close. So this line at 4.45 is sort of isolated. There's no confluence with any other sort of resistance level, and it's a sort of one line on its own. I think that'll provide the least resistance of all of those 3 red lines that I've drawn in. The next one above that is more interesting. Notice how we've got a confluence of 3 things. That red line, now we're talking about 4.8 to 4.9. That red line there, it's also the 38% Fibonacci retracement level. It's also this previous swing low. And remember, if we go back to the weekly chart, it's also the weekly market structure break. That MSB is at 4.74. So somewhere between 4.75, that's the market structure break, the MSB level on the weekly chart, and this red line, the previous resistance going back to wherever it was, and this swing low, all in the same area, should be our next formidable resistance level. So it's quite a long way above where we are now, about $1 higher. Now, there are all sorts of reasons for us to be bullish. There's the polar vortex weather approaching. There's the Trump factor. There's the Russia-Ukraine factor, and a couple of other things thrown into the mix, including the futures contracts and the COT positioning. So looking at all of that, my most optimistic, but also probably most realistic expectation is that 4.8, roughly around 4.8. I'm going to go with 4.8. I like the 8s and the 2s on any chart. So let's say 4.8. It's roughly in between all of those is the next resistance level, and that's my target. I may start taking off some size once we get up through here. I might even add some actually if we break up through this level, the 200 period week moving average, and through that $4 level for a ride up to 4.45, the next resistance level, the minor resistance level. There I might take some off, and then up to 4.8, where I'll probably hedge or take some profit on those trades. Not 100% sure. It all depends on the way the market reacts to that price level and the way the price approaches that price level too. Let's go back to the daily chart, quickly have a look at that. It's much easier to see on the weekly chart because we've got to zoom out quite a long way. But a lovely, beautiful picture. We've got our dynamic trailing stop in place now. That's this trend line. And the 20-day moving average, that's the green line. So as long as we stay above those, we're pretty safe. We're well above those right now. So let's go back to the 4-hour chart. This is the Henry Hub chart on TradingView from the NYMEX. So it is 15 minutes delayed. Doesn't really matter. You can see where we are. So our long position is right here at 3.31. We're currently trading at 3.8. So we have 50 cents profit in this already. Maybe looking to add some more on a break and a close above, and maybe a retest from underneath at around about the $4 level for a surge up to 4.45 and then 4.8 to cover or hedge completely, something along those lines, as I said, depending on the price action at that moment. Well, I hope you found that useful on the day before New Year's Eve. Be a pretty exciting day for natural gas traders. And if you are short, I suggest you cover your shorts or hedge or something like that, and maybe try and get long on a retrace of some dip or some sort like that. All right, take care. If you enjoyed the video, please give it a thumbs up and a like and a subscribe. Share with your friends. Really helps support the channel and makes all this effort that I put into it worthwhile. Take care.
Futures and options, longs and shorts, price swings that cut like a knife through the heart. Henry Hub's a battleground, bulls against the bears, whispers of a cold front send us in the scares. Margins tight, margin calls, nerves they fray, wondering if I'll see green by the end of the day. I'm a natural gas